My name is Michael, and welcome to another episode of the Market Pulse. For this week's market calendar, things could start to shift for the market. Yesterday was retail sales, which came in pretty positive and brought back some buying activity in the market. Tuesday today, housing starts, which will be a big gauge on where the consumer currently sits at and whether they can even afford housing with everything that's going on and housing continuing to rise. That question is up for grabs. NVIDIA is also hosting their GPU technology conference with some of the top names in the technology industry. This will be huge to see what some of these big companies are doing in their industry. Wednesday, the Jerome Powell will release his press conference for the two-day Fed report. This is huge for the market right now. Everything falls on where Jerome Powell currently sits at with the economy, inflation, and interest. Things are looking like the Feds will hold interest rates currently, but that could change with tariffs and all of the rising concerns in the market and economy. Wednesday, General Mills will also release its earnings report, which could have a negative turnout. General Mills has been cited with using a lot of dyes and sugar ingredients in their products. Thursday, Nike releases its earnings, which will be huge for the company to see if they're back on track with high profits and a good positive market bullish trend. FedEx also releases their earnings report on Thursday to see where the shipping and package industry currently sits at. So for the current economic conditions, jobs report got released last week. In February, we added 150,000 jobs to the market. In January, it was at 125,000, so a 25,000 increase. Love to see this. Any increase in jobs is always a good thing. Bringing more jobs to the market is always good. But are these jobs getting filled? That question is yet to be answered. Since March of 2024, the jobs report has been kind of fluctuating up and down, but we are now starting to see somewhat of a exponential increase in jobs report. With everything going on and rising prices, more jobs is always a good thing. If the economy is continuing to add jobs, that means more businesses are starting to emerge in the economy, showing some type of strength that a lot of investors right now are yet to see. The unemployment rate got released last week with a 0.1% rise from January of 2025. Like I said, we're adding jobs. We added 25,000 jobs in February, but are these jobs getting filled? A 0.1% increase may not look big for you, but it is a big, substantial amount of the population that is now unemployed. And this raises the question of stagflation that is currently flooding the market on every news channel. So is the economy starting to slow down? I don't know. We're adding jobs. It's always a good thing. But unemployment is rising, which is not a good thing. So I'd like to see this number start to decrease. Since February 2023, unemployment has been steadily rising, which is not a good thing for the market, and that brings even more fear into the market. And we are definitely seeing some of that fear. Retail sales came out yesterday with a 0.2% increase in January. It was quite negative, which brought a lot of negative sentiment on whether some of these companies will be able to generate these high profits. But retail sales did increase by 0.2%. The estimate on Wall Street was 0.6%. So a 0.4% difference from the estimate. But any increase I like to see. With what's happening right now and all the fear that's flooding the market, an increase is always good, especially for retail sales. And this lessened the fear on the current recession and everything that is going to happen. Now, we don't see any Trump stuff, which right now is a good thing. We have seen Trump for the past couple of months in the market. Every single day I open up my news app and I see Trump hitting another 20% to 25% tariff on some type of product. But I do expect to see him hit another 25 to 20% on a product in the up and coming days or weeks, which could bring some more fear into the market if inflation continues to rise. Now, inflation is rising, which is never a good thing. The tariffs are bringing more inflation to the market. Egg prices are the highest that we've seen in a while. A lot of grocery stores also have insanely high prices, but it seems like consumers are somewhat able to afford these high prices. So are we really in such a slower economic growth rate that a lot of investors are currently seeing? So for this week's weekly stock looks, if you know, I did buy some positions in the S&P 500, specifically the SPDR ETF, on this low right here. Will the stock continue to rise? I don't think so. I think that it will continue to go down with a lot of what's happening. The Feds right now have a big influence on whether the market is going to go up or down, and we are yet to see what happens. But once Jerome Powell releases that press conference, we'll definitely see how the market reacts to that turnout. Some of the other big names that I am looking at is NU. NU is a great company. NU operates primarily in Latin America, and they are in the fintech industry. They have no physical branch locations. I've been on this company forever, and they had just released their earnings report a couple of weeks ago, which turned out negative for the EPS, which definitely drove down that share price pretty significantly, as you can see from this chart. But it's back on track. Fundamentally, the company was super strong for this quarter and for the year. And I think they will continue to grow. They have such a high market penetration in the area they operate in. Most banks don't offer any fintech products to their consumers, so they have a big market share in that aspect. But it did take a dip. I think it's still currently trading at a discount, and I think you still have some room for future growth. This company will continue to grow. Fundamentally, it's strong, and I don't let go of a company till it becomes unfundamentally strong. Another stock look for this week is Nike. Nike's stock has fallen very significantly since November of 2021. The previous CEO tried to focus on a strategy that lessened their wholesale accounts and focused more on their online and retail store locations to increase their profit margin. This did not increase their overall profit, that's for sure, and it definitely drove down the stock price. This strategy definitely did not work out, but Tim Cook, the new CEO, appointed by Phil Knight, took over the company a few months ago, and I think he's going to reshift this strategy and now more focus on those wholesale accounts. Now, can they rekindle their relationship with their wholesale accounts? That's yet to be said. But this earnings on Thursday is going to be huge to see if they're back on track with their high profits. Another stock look for this week is Bowhead Specialty Holdings, a newer company. They had their IPO in May of 2024, and they have been somewhat bullish for their share price. A smaller insurance company, but they have a large room for growth, a lot of assets, and their investments are very strong in that sense. So definitely take a look at Bowhead Specialty Holdings Inc. My last look is just looking at more trades in S&P 500 index. If this continues to go down, the market sentiment is still negative, and this stock continues to downslide, and the overall market continues to downslide. There's still more buying opportunities. You're buying this on the dip, you're buying this at the discount, so I think it is a great opportunity to get some cheap shares. Well, that's all I got for you guys for this week's Market Pulse. I hope you enjoyed. If you have any questions, make sure to drop them down in the comments, and I will answer them for next week's Market Pulse. Thank you guys for watching.